Thank you, everyone. Thank you for joining us. Today we have IEX management with us. We have Mr. Rohit Bajaj, Senior Vice President, Business Development, uh, veteran in the industry. It's going to be largely Q&A driven, but obviously I will request Rohit to give some background of what's exactly is happening. Quite of exciting things are happening in your space. So I have a lot of questions, but nonetheless, so if you can talk about what exactly is happening on the demand supply front to begin with, right? A lot of ups and downs from April to now. So how we're doing right now? Let's start from there.
Yeah, thank you. Thanks, Shalin. So let me also touch upon what happened in the recent past, which was last financial year and the year before. So what one thing was common in all these years that we have seen a huge growth in demand, particularly in FY22, demand increased close to 8%, 7.8% precisely, and it is set to grow in a similar fashion in the next year, which is FY23. So last 2 years have been very good for us. Both the years, our growth was around or little more than 35%. First year it was more because REC trading was not done. So electricity growth itself was 37%, 35%, and last year overall growth because REC trading also started. So small contribution came from REC trading as well. So put together, it was 37%. One thing we always maintain whenever the demand is high, whenever demand growth is there, we get major share of it. The reason is pretty simple because up to certain extent, demand is met by long-term PPAs and whatever overflow is there, that normally comes to us. So this was one reason why this was high. And second thing that has happened in last 2 years is prices were also in check. So majority of the time, in last 2 years, out of 24, I would say 18, 19 months, prices were less than 3.5 rupee. And this is the price point at which distribution companies and other industries are very comfortable in optimizing or replacing their costlier power by thereby taking advantage of the exchange procurement. I think these are some of the highlights which helped us register good growth. And talking about this particular year, we started this year on a little different note because in the starting March, we have seen huge increase in demand and then they were constrained on the sell side. So there was not enough cell available. We know there are reasons for it because of geopolitical tension, because of our own increase in coal generation. Our coal inventory was not good. Our dependence is measured largely on domestic coal. More than 90% of our power generation is dependent on domestic coal. But because we have registered so much huge growth, the coal production could not keep pace with the demand, and slowly our inventory was depleting. That was one reason, and then the commodity prices were very high, including all sorts of energy. So coal was no different. Coal HBA index, which is a measure of imported coal prices, has been trading at all-time high to $288 per ton. This is the per ton. This is the price for the month of April. And in case of gas also, we have seen prices in excess of $40 per MMBTU, which is unthinkable. It's very difficult to imagine that gas will be traded at that price. So these are some of the things which caused disruption in the supply side particularly, and because of that, there were pressure on the supply side. Supply got reduced. We had enough demand. There is so much buy which was available at our platform, but in absence of supply, the cleared quantum has taken a hit. So April, we were about 1.5% down as compared to, April YOY. May we are, I think, 15 to 18% up. We have covered up a bit. And all in all, we are, I think, 4-5% up YOY till now, or let's say 50, 55, 52 days of the current fiscal. So this has been story so far. Government has taken so many measures There is focus on increasing coal production. In the month of April itself, we have seen 28% increase in dispatches, which is again unthinkable, unprecedented. And all the railway infrastructure is being used for the purpose of dispatching coal on priority. This is some of the initiative taken by government. And then similarly, on the imported coal side, there is directive, there is order by Ministry of Power, where all these imported coal-based plants have been asked to operate these plants. They cannot stop this plant on the pretext of a distribution company not paying. At the same time, distribution companies are advised to pay special tariff to these plants so that they can generate and country can take advantage of this capacity that we have created. And as a result, we have seen there has been correction in the prices. We started this month on a very high note. The prices were 20 rupees, average price were 18, 19 rupees. After that, government imposed on 3rd of April, it got introduced 12 rupee cap on the prices in day-ahead market and RTM market initially. Thereafter, we saw almost 2 weeks price was continuously close to 12 rupees. After that, with the as the supply increased, the government initiative, whatever they had taken, that helped easing of the supply side constraint, and thereafter we have seen the prices have come down. So these days, with the correction in demand in some part of the country because of pre-monsoon and now because of some disturbance in the northern part also, some storm, there has been major correction and now the prices have come down to close to 3 rupees. So all these things we have seen in the last 50 days going up to 20 rupees, then 12 rupee cap, and subsequently it is coming down drastically. RTM has been doing exceptionally well because wherever there are uncertainties, when participants want to buy closer to real time, RTM market always does well. And recently we have recorded all-time high volume in RTM market. 2 days back, we touched 104 million unit in a single day. So which is phenomenal because we never thought that it is going to cross 100 million unit mark so soon. So that's one thing. But yes, day-ahead market volumes are little on the lesser side. Green market has started doing exceptionally well. We have seen close to 45-50 million unit in green day-ahead market. So that is also, again, I would say sooner than expected. So all these newer products are helping us registering growth in this tough time. And I'm sure as the things will further stabilize, as the supply side constraint will further increase, as the mix will further change, because going forward, we are expecting wind generation to increase, hydro generation to increase. The situation, supply side situation will be much better, and then volume will further increase. I think this is the summary of the recent trade that we have seen.
Sure, sir. Sure. I asked because participants, if they have a question. Yes, we do have a first question coming up from Patrick. Patrick, please go ahead.
Great, thank you. Just wanted to ask about how the recent price volatility may impact long-term kind of willingness to move to the exchange. So obviously you go through a period where prices become so high. Does that encourage a lot of buyers to actually get into long-term contracts rather than take the price risk that you've seen over the last month or so?
Yes, I think very relevant question and very important for us, because if the volatility is so high, if the prices are so high, there can be distribution company will start to think about entering into longer duration contract. But what we have seen recently is in the bilateral market also, situation was same. I would say it was even worse, because in this particular market, what we have seen is when the prices at exchange was 10, 12 rupees, people were quoting even higher in the bilateral market. So that's one thing. And because of that, not many transactions shifted to bilateral market, number one. And second is there are no major concerns as far as a long-term story is concerned. So it all depends on how much installed capacity we have. So even today, we have decent capacity in place. The disruption that has happened, it is because of some temporary issues. So people are confident, and in fact, we have been conveying this message to the distribution company that these disturbances are just temporary in nature, and another few months' time, we are expecting it to stabilize, and the requirement of power will go down. Requirement of thermal power will go down in coming months because of, as I mentioned, energy mix will change. And again, there is, if you refer to last 4 5 years data, there has been only 4 5 months where we have seen rates crossing 4 rupees. So people will take call on the basis of all these data points, not purely on the basis of 1 or 2 months, on the basis of experience in 1 or 2 months, where some external factors are also responsible.
That makes sense. And so I suppose the average price has still been sufficiently lower on the exchange versus bilateral markets or PPAs.
So Patrick, I will add one more point here. See, the distribution companies today are not uh, deficit for throughout the year for all the months, or you can say all the time blocks or all the hours of the day. So they have deficit for some particular season or some particular time blocks. So it doesn't make sense for them to enter, because when you enter into a long-term contract, then you have to buy power which is a same quantum for longer duration, 5 years or minimum 5 years, and then it can go up to 25 years also. So they are also wary about two things. One is the technology is changing. We know that how it is moving in the direction of renewable, and second, how storage is going to play a very important role in times to come. So they are not very keen in entering into longer duration contracts as far as normal thermal power is concerned. And second is the flexibility. So they don't want power 365 days, 24 hours. Their requirement is only for 2 3 months and in certain hours, only in peak hours. Now paying fixed charges for complete year vis-a-vis paying little higher cost from exchange for certain period of time, I think this is the call that they have to take.
Got it. I suppose one thing which will help with managing the volatility is the launch of futures and derivatives of electricity. What's the kind of timeline for that being rolled out, and what sort of impact do you think that can have on the physically settled volumes for you?
So you are referring to how it is going to impact our volume, right? Physically settled volume.
Exactly.
So as I said, these are long duration, long-term decision. For entering into long-term, they will take call. Short-term situation is even worse. Short-term bilateral contracts are seeing similar sort of disruption, wherein the in fact there the prices are even higher because they are not aware of the future spot prices of imported coal or future spot prices of the gas-based plants. So I am expecting, as the mix is changing, the situation should be back to normal. Back to normal means, again, their participation will increase as the demand will increase in coming few weeks time. So another 2 3 weeks, the volume, so our volume should start to increase again.
Okay, got it. And then could I ask about gross bidding and the plan to roll that out? What's the kind of what approvals are we waiting for, and when should that product be launched?
Yes, so there are many things in pipeline. The first thing that we are expecting is a longer duration contract, which is going to address problem of short-term procurement, bilateral procurement for the distribution company, where procurement can be done for up to a year through exchanges. So till now, we were allowed to do only up to 11 days, but going forward, it would be monthly procurement can also be done, monthly, bi-monthly, anything up to 1 year. So this should happen in as early as, I would say, 1 to 2 months maximum. So our initial target was 30th June, and still we are maintaining same target. It is in very advanced stage of getting regulatory approval. And once we have that approval in place, we need just a week's time to launch. So we are still hopeful that in the month of June we would be able to launch that. Another thing that is going to happen is ancillary market, wherein which is a where our role is little limited, but that should also happen in, if not June, then July, August. That should also come. And then launch of derivative is also on cards, where we would not be launching it, but we would be the major beneficiary of it, because when the buyers or sellers, they have options, hedging options available, they will increase their exposure in the spot market. So this is the third thing that we are expecting. And fourth one, which is bigger than all these three, is gross bidding, which again one proposal that we have filed with the regulator for getting approval, and we are expecting it to get approved in 1 to 2 months time, so that we are in a position to launch it in Q2. So these four things we are working on presently, and if you ask me, by end of Q2, all these things should able to see. We should be able to launch these contracts.
And so for gross bidding, who actually needs to approve that?
Yeah. So gross bidding, we are obtaining approval, though not many changes in the regulation is required. The approval is again, it is more from the point of view of selling it effectively to the distribution companies. So once we have approval in place, then it is always easy to convince distribution company to participate at our platform for the purpose of cross bidding. So this is again one option which is proven one. Globally, many exchanges have this option, particularly Nord Pool and Japan, where this is being used. And we are hopeful that if participants will start to use this option, the optimization or the system savings, procurement cost savings will be done automatically.
And have you decided on the pricing for gross bidding?
Yes. So we have not yet decided, but the pricing of gross bidding would be different. So there would be two parts in gross bidding. One is the net procurement or net selling. Now, net procurement or net selling is similar to what they are doing presently. There, the pricing would be same, what we are charging now. On the other part, which is for the purpose of bringing total volume to the exchange, there we would be offering certain discounts to them.
Okay. And you'll make that decision on how big a discount just before you launch, or you know, yes. when do you, yeah, okay.
So that we would be doing before the launch, yes.
Got it. And I mean, what's the kind of range of options you're discussing? Is this something which will be a greater than 50% decrease in price? How do you think about the potential right level of pricing?
So pricing only too early to comment on that, but yes, there would be discount for sure. That is one thing which we are convinced. Since they are getting everything to the platform, they are participating on gross basis, the pricing would be different.
Okay. And then just one more question for me. Can I ask about, I read that recently the regulator has requested some opinions on exchange pricing overall. Why is the regulator looking at this now, and what have you kind of submitted in terms of your view on pricing?
So the regulator, see, when the PMR 2021 came about 1 year back, that time there was a clause in that. First, the pricing clause was there, which said that exchanges should not charge more than 2 paisa on either party to the transaction. So this is one thing that was mentioned. And then there was one more clause wherein they said that exchanges will take approval of transaction fee from CRC within the 6 months period. So these two things were mentioned in PMR 2021. And subsequent to that, we filed petition also. The petition was for all the changes that we have made in the business rule, plus obtaining approval. So they have approved all the changes that we have made in the business rule, but they said that some more detailing is required in case of petition of the transaction fee. So we just mentioned that it is within two paisa ceiling that has been given by you. So we have not given any further details, but they are asking us to provide what is the structure and all the justification and something like that. They are asking us to do, which we are going to file soon. So this petition we would be filing, and since they have already approved, they have already given 2 paisa ceiling. We are hopeful that in a time-bound manner, in a due course, in coming months, we should be able to get favorable order.
Okay. And where are the competing exchanges pricing currently?
So it is same for PX, the other exchange which is operational presently. The pricing is exactly same. They are also charging 2 paisa. They do offer some incentives, but as far as regulatory approval is concerned, it is only 2 paisa. The third exchange is also what we understand in their petition. They also wanted to launch exchange with the same pricing. That's the stand so far. And then we are also getting a lot of strength from trading margin regulation, wherein Commission has allowed 7 paisa trading margin to trading companies. So they have given ceiling there. Within that ceiling, traders are competing. They are offering different transaction fee to the different parties based on duration of the transaction and also on the basis of trustworthiness or payment security, and considering all those aspects. In our case also, our prayer is that it should be 2 paisa only, as already being given by a regulator, and then all the exchanges would be competing within this gap.
Got it. Thank you very much.
Thank you.
Thanks, Patrick. Sir, we have a next question from Praful. Praful, please go ahead.
Thank you. Congratulations, sir, on great execution. Just a couple of questions. Our interaction with PTC suggests that they are looking to launch their exchange maybe anytime now. They were suggesting April and May, and they're very confident of taking close to 20-25% of market share. How are we prepared to counter this competition? That's the first question. And secondly, given that cost of disintermediation across the globe, if you look at AMC business or a brokerage business or any business that disintermediates, has been structurally going down for a long period of time. Over medium term, can you just give us thoughts that if spreads have to compress, then what kind of volume visibility we have to ensure that the earnings trajectory remain solid? These are two questions.
Yeah, so to answer first one, we have been constantly working with our customers, taking feedback, developing technology, taking it to the next level, trying to launch different contract types, understanding their requirement. See, within this case also, though the major contract is day-ahead market or term-ahead market, but within day-ahead market, you can innovate, you can provide various options to your customers, which will help them utilize this platform in a more efficient way. So this is what we have been doing all these years, in fact, more so in last 2-3 years. And I think we have done a lot of development during this time. And our now technology is very sound. It's way ahead of what it was 2 years back. And I can say so confidently, because what we have seen is when we started real-time market 2 years back, there were many sessions which used to abort because of some communication failure or some so many different technical reasons. Some were at our end, some were at NLDC end, so POSOCO end, system operator end. But we have invested a lot in further strengthening our technology, and today we have reached a stage where our success ratio is 99.95%. There has been just one or two instances where there was some issue, and that too was because of somebody else problem, not because of our technology failure. So this the markets like RTM are very, very critical, because when the participants are placing their bids in a real-time market, this is the last resort available for any participant. So if something goes wrong here, then they do not have any fallback option available. So we have to be so strong, so robust, that we should be able to run the engine, we should be able to discover the price, do the clearing and settlement in a proper way, and finally schedule that quantum. And this we have been doing more efficiently now. And we feel that the kind of value we are providing to the customer, and they, when we started, our share was not 100% in RTM, but if you see last year, this number has increased to 100%. Day ahead market also, there were many in between new launches done by our competitor. There were time when they have taken some 2, 3, 4, 5% share away from us for a short while. But if today both day ahead market and real time market, our share is 100%. So the liquidity, the participants, the confidence of the customer, I think we have all the things in place. We understand this business. We constantly innovate, try to provide value to the customer. We are banking on this, and with this, we are hopeful that, and we are going to do this continually going forward. And with this, we are able to maintain the leadership position. This is what I can say as far as competition is concerned. And the second thing you asked is about how we are expecting it forward. There, I must say that, see, we even today, we are, last year numbers are, we are 7.6% of the total consumption in the country. This number is set to grow for the reasons known to us. I have in previous calls also, I have always shared the incremental demand which is going to be there in the country, for which there is no long-term PPAs available. That demand is going to be met by places like IEX, places like power exchange, number one. And second thing that is very important here is major new products are going to come, are going to be launched in times to come. There could be central, what we have seen, what we are talking about, gross bidding, it has potential to take it to the next level altogether, number one. And then things like CFDs, contract for differences, are also being considered. So government has a major issue as far as capacity addition of renewable is concerned. And today, not much is happening in that particular space. A lot of price discovery has happened, but there are not enough buyers in the market. SECI is trying to do so many PPAs, but not many buyers are there. So now they are thinking of routing capacity addition through our exchanges. I think what you are saying is true for all the mature market where we have seen a market contributing immensely, but this is one place where we have just started. It is at a very nascent stage. The participants have realized the value, not only in India, globally also. This has become most preferred option for trading or procurement of electricity. We expect that this will set to grow, and the things that I have mentioned, whether it is CFDs or gross biddings, this will take us to the next level in times to come.
Thank you so much.
Thanks, Prabhu. Participants, if you have any questions, please feel free to ask. In the meanwhile, one thing I noticed, like, while there was a time in April when demand have tripled and supply shrank by 10 significantly. Things have reversed while supply has come back, but demand has not come back. So in just 1 month, things have completely reversed on a dam. So what exactly is happening? Why demand is completely dried down while supply is back and prices have come down to 3.5 from 12?
Yes. So see, what happens is, we get, as I mentioned, there are two types of buy that we get. Demand has got just two aspects to it. One is, or I would say three. One is the deficit buy. So one state is facing some deficit, they want to buy. What we saw in October first fortnight, or you can say April or March, there was so much demand which was coming. It was all deficit buy. These states wanted to meet their demand by buying through exchange at any cost. They were willing to pay 12 rupees, 20 rupees, whatever. Now what has happened recently, suddenly wind has increased, suddenly hydro has increased, and with this, and some imported coal plants have also started. Now with this, state's own availability has increased, and this is a normal phenomena. Every time, every year you will find this. March, April is the peak month for thermal generation, and May onwards, this thermal generation will go down, and so is our problems related to coal and other things. So now what is happening, as the things have started to cool down, all these distribution companies will watch it for some time. They will not take decision on daily basis when to shut, when to start. So what happened last week? We were in talks with many distribution companies. We were trying to convince them that prices have come down. Now they should start stopping their thermal plants and start to buy from exchange, because it makes sense now. At anything below 4 rupees, there are, in many of the states, it makes sense for them to buy from the open market. But all of a sudden, what we saw last week on the Thursday, price again went up to 6 rupees 90 paisa. So now that stability factor has not yet come. Volatility is still very high in the market. The price variations are so much, and by the time they decide, by the time they want to take decision, there is a one upswing in the prices, and then again it goes for the toss. So now this correction has happened. Now we are hopeful that this will continue for a few days, and then they will able to take such decisions.
Is there a market share shift during this time of period? Like this is not the first time, right? 2017 or 18 festival season, right? When the demand spiked and we saw moving to the short-term contract, right? And then election time, 2019, right? So is it that's happening, like short-term?
No.
People have come to.
So they wanted to do that. Buyers wanted to do that, but as I mentioned, the price quoted in the bilateral market were very high. In fact, see, distribution company can buy on daily basis. They have to take decision on daily basis. They can buy one day at a time at 12 rupees, but they cannot enter into a contract for 2 months or 1 month at 12 rupees. Because if you are entering into contract at 12 rupees for complete month, that decision they are not in a position to take. Nobody will give them approval for that, not even regulator. But one day at a time, when it is exchanged, they are confident of the price discovery, they may buy at that price. So distribution companies were interested. There were so many tenders which came. There were numerous tenders which came. They came out with so many tenders, but since the price quoted were very high, that could not get executed. So no major share shift has happened.
So the demand reversal should be much faster then. If the market share shift has not happened, then we should expect demand reversal should happen.
Absolutely, it should happen very fast. Yes.
Okay. Okay. I just check with the participants if they have any question. We have a question coming from Madhu. Yeah, Madhu, please go ahead.
Hi, can you hear me now?
Yeah.
Yeah. All right. So Rohit, I had we've been following the company for long. Of late, just seems like some regulatory issues have sort of cropped up, and typically when governments start tinkering with pricing, as we have seen in the case of, let's say, the oil marketing companies and all, the uncertainty around that kind of almost has a pretty significant impact on the stock valuations per se. Can you help us sort of understand, like when we are looking at your company, where are you seeing sort of those uncertainties come up, and will they go away or are they here to stay?
See, what has changed in last couple of months is only one thing, wherein they have introduced cap. That's the only thing which has changed, right? The rest of it, everything is same.
Yes.
And see, this is again bringing down 20 rupees to earlier also cap was there. It was a technical limitation, you must say. Exchanges, the time when we created this platform, we kept provision of 20 rupees. Now they have reduced it from 20 to 12 rupees. And they had reasons. They had reasons to believe why they wanted to do it, because they could very clearly see in none of the case variable cost or cost of generator of any of these generating company is more than 12 rupees. So they decided and reduced it. And this is again temporary in nature, because order clearly says that this cap is applicable till 30th of June. After 30th, it would be same as it used to be earlier. But I do not see this this is a significant thing for our business. This is a temporary issue. Government was seeing some problems there. The cost of procurement was increasing. There was limited available, and everybody was bidding aggressively to get more and more of it. And since everybody was bidding aggressively, they were getting on pro rata basis, all of them. Now this has been reduced from 20 to 12. Here also it is being distributed on pro rata basis. So nothing has changed. So I am not seeing it as any major event. The fundamentals of the business remain intact, and with cap or no cap, see today, or in fact for last 15 days, cap has no meaning at all, because prices are not going in double digits. So there is no meaning of cap. So you put it at 12, 15, 18, 20, whatever, doesn't matter. But yes, we got impacted because of cap for some time when the price discovered was 12 rupees. That time we got impacted because...
Which is a question, Rohit, we are trying to understand over here. Is this a good understanding now that, if prices go beyond 12 in the future, they'll basically put that cap at 12 and then say that, okay, over this, we'll not allow pricing to go. Is that a set thing in stone now, or is that again like, after 30th June that goes away?
Yeah, so first of all, it will go away because there is no ambiguity in the order. Order clearly says that it is up to 30th June, number one. Number two, I told you that we got impacted because initially when cap was introduced, it was applicable only for DAM and RTM. It was not applicable on TAM transactions, right? And what people did, they started moving TAM transaction. They started doing TAM transaction to get more quantum, to assure certainty of getting that quantum. Now in TAM, our share is not 100%. So last year, our TAM share for the complete year was 70%. This time, initially, it was even less. So what happened? In DAM and RTM, we were getting 100% volume. But in TAM, the quantum which was shifted from DAM to TAM, we were getting, let's say, 60% volume. So we were losing 40% volume there. But after a while, when government realized this, that cap should be same across the segment, they immediately came out with the second order. And now this cap is applicable on DAM, TAM, RTM, and everywhere. So there is no possibility of this split again or this share going away from us.
So see, I sorry to belabor this point, but I still don't have any clarity on this issue. First, they brought from 20 to 12. Now at 30th June, the 12 goes away. What's stopping this government? Like, they've done some things on like containing inflation again today on whatever diesel, petrol, and other stuff. What's sort of, stopping the government from at a later date coming and saying, okay, now 10 rupees is the cap, right? Are we just trying to understand this issue? Like, when you're speaking with them, is there a sort of dialogue that, okay, can we have definitive rules so people can understand that, okay, this is how this business is going to operate, or that uncertainty is going to stay?
But see, this doesn't matter for many of the participants. So today it is 12, suppose they extend it also. See, why, first of all, why they have decided till 30th of June? Because they are expecting the volatility which is there in the market, this maximum can continue up to 30th of June. After that, as I mentioned, there would be different mix available, and with that different mix, the possibility of prices going up to that level would be very less. But yes, the same problem can come again in October. We have seen historically also there has been many instances when in the month of October prices went very high. But the point is, If you differentiate, then there is a problem. So if 20 is also a cap, right? 12 is also a cap.
I agree.
Tomorrow,
Yeah.
30 can also be a cap. So point here is, you have to take decision on the basis of cost of generation first check. If you are doing that, then it is fine. If you are imposing that cap for some point in time, in a way it is giving signal to the market that prices will be in this range only. So today the cap is there at 12. Distribution companies, they get some sort of comfort. They are our major buyer, so they are getting some sort of comfort that it won't go beyond 12 rupees. So it is helping us also in a way. So point is, cap was there earlier. Cap they have changed. They can change it tomorrow again, as you said. Yes, they can do that. But unless you create different cap for different segments, then otherwise it is fine with me. You do one capping across the segment, it's okay. I'm not impacted.
Thanks for that clarification. Yeah. And that's a good point actually. Thank you so much. Yeah, thanks for it.
Okay, thank you, Madhu. Participants, we will have like 5 minutes in this call. So if you have a question, please feel free to jump in. Nonetheless, anything you're hearing on market coupling?
No, not really. See, they wanted to do MBED, and this was a related point because they thought for MBED to be therein, then they wanted coupling also. But MBED is also, there is absolutely no clarity on MBED. There are so many changes which are required, so many regulatory changes which are required, and that has not yet started. So if you start today, then probably you will take 2 years, but then they are going to start, it is nowhere in sight. So long way to go.
And MBED, any progress you're hearing or any efforts from the government in that direction, or is just,
No. So last thing what we heard, and so we do get some signals, but last positive signal that we get from their side was when they said they wanted to implement it from 1st of April.
That's long back.
Yeah, that's long back. After that, I think there is no major positive development. They do discuss about it, talk about it, but the focus which was there earlier, right from top minister level, then down below, everybody was involved into it. But nowadays, nobody in the public forum also, they are not talking about it. It is very difficult to do. And then states have opposed it in a very big way. And you cannot ignore their opposition. Ultimately, it's their power. They are owner of these PPAs. You cannot force. In fact, even with the policy change, you cannot force them to come to this same platform.
Just last one question from my side. Again, if you can touch base on bit on gas exchange, if you can tell us what's happening on there. Is there volume changes? We saw some strong pickup there. So is it driven by again scarcity, etc., or is it sustaining?
So Q4 was we saw major increase in the volume, but again Q4 when we started January, February, prices were not so high, but March, I would say second fortnight, April, the prices touched all-time high level of it. In fact, it crossed $40 per MMBTU for some time. And then at that price point, no transactions were happening. So April was not that great for us. In fact, very few transactions happened. But yes, we are acceptance of the market has come now. The participant base have built up. Only issue is the right price. Recently, we have seen again some transactions starting as the prices have come down. So the appetite is at a price point up to 20 or little below 20. There is a strong appetite what we have seen in the market, and we expect volume to pick up again as the prices go down up to that level. And it is coming down. It is coming down drastically, I must say.
and we won't be in any rush to sell any more stake in gas exchange, right?
No, that's all done because last one was IOC, and again it was a strategic divestment decided long back. It was in fact a board of IOCL has taken some time. It got executed little late, but with that everything is done. No more stake sale is being under consideration.
Okay. All right. I believe we don't have any more questions from the participants. I'll just wait for quick 5 seconds to see any raised hand. Nope. All right.
Thank you.
All right,
Thanks.
sir. Thank you so much for doing this.